As a research firm, Chant West has been fairly vocal about some trends.
Yep.
Chant West has done some research which shows that lower fees are not always the best outcome for the members. And also, I think, but I may not be correct, you've got a bit of a bias towards active management over passive.
Sure.
So where does that kind of take us, given the regulatory moves, given the way that the industry's going?
Active versus passive is a really interesting question. We believe that in many asset classes, active management can add value, but there'll be times, and there might be some asset classes where the premium that you pay for active management may not be worth it. So we do not believe that active management is necessarily the best thing for every fund. What we do say though is we are cautious about funds which have chosen to go down the passive management path for all their assets simply for the reason of cost. One of the problems if you go down the passive route for all your investments is you end up locking yourself out from a whole range of asset classes like unlisted property, unlisted infrastructure, private equity, hedge funds, etc. So you end up with a portfolio which is much less diversified and much more susceptible to the sometimes large ups and downs of the market. I think members need to expect there'll be some ups and downs on the way, but I think they're also looking for funds to try to smooth the ride a bit. And I think a lot of these unlisted assets have smoothed the ride a lot for particularly members of industry funds, but also retail funds are increasingly putting more assets into this space.